Good morning, Jags. This is Fahad. Today is Friday, November 6th. Let's get started. The chart that's in front of you is XLRN Pharma, symbol XLRN. This is a former Jaguar top pick from quite a while ago. If you go to the Jaguar homepage right over here, you will see on the right-hand side, just below this chart over here, you will see download previous performance history and full unlocked files. If you click on this, these are all the topics in history that we have had since inception, and a simple Control F search for XLRN will show you that in the second quarter of 2018, that's when we made this a topic. And if you just click on that link, you will see another Control F search XLRN, and you will see this was on page 13. You can find the full write-up behind it. All right, now I bring this up because back then when we made this a topic, this was a development phase pharmaceutical company, a biotech, which was at the time, the entire bull case was based on how the clinical data should be expected and how it should gradually unfold as the company gets to eventual launch phase. If you look at the long-term weekly chart, this was the moment in 2000, right over here actually, all the way back in 2018. And this was a phenomenal quarter at that time, because when we made this as a topic in the second quarter of 2018, in the same quarter, late in June, we saw this stock spike sharply as we had expected when the clinical data came out. And that time the stock was up 30-35%. So a lot of the clients end up making a lot of money on this one. And then it went into a very long base, and then more clinical data came out, and then gradually finally stock started to work higher. So you can see how long it has come. What used to be a $36, $37 stock when it was made a top pick, and now trades at $109 per share 2 years later. Now, why do I bring this up? Those very clinical data programs that we had discussed originally, which is why we made this as a top pick, those programs are now, they have now been launched, and the company is now selling after the FDA approval and everything. Last night, the company reported earnings, which were quite strong. And so I would like to discuss how strong the quarter was. And now I want to see if when the market opens today, because in pre-market, it is very much flat. You can see that there's literally no action taking place in pre-market. So watch this stock. Let's see if this thing is going to push higher after the market opens. Closed at 109, but based on the strong results that we saw last night, there's a potential over here that if the fresh new buying comes in, I think after 8-9 months of consolidation and a bounce, but basically between $90 and $110 per share, it is a good chance that this stock is going to start leaving behind all of this VOP congestion level and essentially work its way to a new 52-week high. Now, regarding the quarter, this was fantastic. XLRN reported Q3 royalty revenues of $19.3 million on $96 million of Reblozyl net sales, which was precisely the bull case that we had presented because the clinical data had been very strong more than 2 years ago. This was a second consecutive quarter of strong growth following the FDA approval, which happened in April. So this drug has been out in the market essentially now for just about 2 quarters, 75% growth sequentially. So the first time the company got the approval in April and launched it, and then comparing that quarter to the quarter that was reported last night, the sequential growth was more than 75% quarter over quarter. Management noted that the strong launch trajectory to date has been driven in part by a bolus effect with pent-up demand for therapy among MDS patients who previously failed or had inadequate responses to ESAs. Having already achieved uptake among many of these patients, XLRN expects future growth will be driven predominantly by patients earlier in the treatment course, meaning that patients that have previously been treated with inadequate transfusions and such. So there is a pent-up demand for this block of patients that previously were not in the population because of COVID shutdowns or whatnot, and that pent-up demand is coming back. And I looked at the last night, the earnings call in the commentaries, and the XLRN expects that I quote, they're very confident, unquote, in underlying launch dynamics that happened in April, and they believe the sequential improvements will continue with more addition of new accounts in Q4, as well as they are also very optimistic on the longer term label expansion opportunity. Regarding the label expansion opportunity, which is always the case with these biotechs once they have a very strong prominent drug, keep in mind that there is going to be a pivotal phase 3 stellar study design, which was started in early October. And the data for this will likely come out at the AHA meeting, which is on November 13 to 17. So we are not far from that. So next week, mark your calendars, between November 13 and 17. We're going to get at this bunch of data presentations at the AHA conference. And then separately, there's also pulsar data and spectra data, which are two separate clinical studies that the company is running, and that is expected sometime in the first half of 2021. There's also other small little tidbits of pieces that are going to come out, but I don't want to go into the entire pipeline. You can read about the pipeline in the quarterly outlook. But the important thing is the quarter was fabulous. The commentary suggests after 75% sequential growth, we're going to see more additions of new accounts in Q4. And there are still a bunch of catalysts coming out that could potentially expand the label for this drug. And the stock is setting up as it started to move higher from all of this 8-9 months of consolidation towards new 52-week high, then pulled back going into earnings, and now starting to take a new leg higher. MACD bull cross, RSI bull crosses are also coming your way. So watch the stock, see how it reacts today. Could be a runner. I do not know, but even if it's not today, potentially in the next month or two with the new catalyst coming out, this could be a runner. And that's it from me. Jay? Jay, are you there? Oh, problem with audio?
Hey, Fahad.
Yes. Okay, finally.
All right, we'll try that again.
Yeah.
So today, I want to talk about EVBG. I want to review their earnings.
Yeah.
Chronicle already covered the main points, the EPS, revenue, billings, full year guidance in first read today. But I want to take a look at essentially what they said on the conference call and then some corresponding analyst commentary. So in the quarter, the company added 125 new enterprise customers, bringing that total to just over 5,400. Taking a look at their critical event management platform, or CEM, that was up 33% year over year in the quarter. Some notable wins there included HubSpot, also one of the largest and best known multinational internet search companies, a Fortune 500 cloud service company. And then they also talked about customers that they already had and that they continued to upsell, one of them being Bristol Myers. So ultimately in Q3, they eclipsed the important milestone of 100 CEM customers. But that said, that is still a small fraction of the more than 5,400 enterprise customers that they have. So, considerable growth opportunity ahead. In terms of deals closed, they closed 43 six-figure deals, which was up 48% year over year. And that was also the second highest number of six-figure deals in their entire history. On the government side of things, they had a very strategic win with the Department of Homeland Security, who selected EVBG to provide a critical component for the Integrated Public Alert and Warning System for the United States, also known as IPAWS. And then finally, one common theme that we've always talked about was the growth opportunity within states and then foreign countries. Canaccord Genuity was out today with their review, and they highlighted that Everbridge currently has a presence in 49 US states, but the company has only won 5 states in the entire notification business. So management estimates that the penetration there is roughly 10%. So plenty of runway there. And in terms of foreign countries, I believe what Canaccord had said, they only have 11 out of the 200 opportunities. And with the EU mandate population alerting system coming in June 2022, international markets again present strong growth potential. And that's something we've talked about in prior notes. Now, technically, ever since hitting an all-time high back in May, the stock has not done anything. In fact, it's been in a downtrend. So hopefully, this earnings report can, give some momentum back to this name, as it had been, one of the best performing software companies out there.
Yeah, as you were talking, that was the very first thought that I had in my mind, because previously, whenever we had talked about this in the context of our bull case, and twice, I believe, we have made this as a former Jaguar top pick. Maybe it needs revisitation for a second time. I wouldn't be opposed to that at all. But the key bull case for us has always been about this massive opportunity for expansion with the European mandate that's in play. But I wasn't clear on the timeline of that, but looks like that's coming in June 2022. So there's still a lot of time between now and then, by which time the full implementation has to take place. I think market continues to underestimate the international growth opportunity with this company, even though to some it may feel like that the US market may be coming to some saturation point with 49 states having already implemented their technology. But I think the international side is the real story. That's the first thing that jumps out to me. The second thing is that, did you say that the number of customers with annual contract value of 6 figures increased by 46% year over year?
It was up 48%.
48%. Yeah. I mean, this is a very, very important and strong dynamics. A lot of the times when we look at SaaS, a lot of the time people focus on subscription billings growth, and they look at the margins improvement, and they look at broad measure rather than just top and bottom line, because it doesn't tell anything, the story about the company. And in this case, when you have that many new customers and large account deals, 48% year over year growth rate in, annual contract value or ACV of 6 figures, that's very, very healthy in long run, because once they become customers, it becomes a part of the recycle recurring business, and then there's upsell opportunities to those. And I'm looking at this chart. This is, in pre-market, this stock is going to be guided higher sharply. It looks like it after closing yesterday at around 118. It's touching 130 in pre-market. And so I think this thing is going to attack all of this VOP congestion level that has been the resistance around between 130 and 40. And I think it's only a matter of time before this thing is going to clear through all of this. And we're going to see new 52-week high in this one. It's been a favorite name of ours for a long time. It has been choppy, no question about it. But I believe a lot of the clients are still long this name, but a great update over there. And I love the metrics, the growth metrics. So good stuff. Chronicle.
Morning. I have 3 updates for earnings today based on 3 stocks that I brought up recently. The companies are Q8 Retail, symbol QRTEA, which I laid out the bull case for last month, and Titan International, symbol TWI, which I recommended to go long on October 6th, and Light, symbol LASR, which I talked about a couple times recently. So let's start with Q8 Retail. The company reported revenue of $3.38 billion versus consensus 3.25. Under the hood, on a year-over-year basis, QVC revenues grew 11%. Zulily was up 10% year over year, and Cornerstone was up 26%. But most importantly, and this was the key point that I touched on, profitability increased massively due to improved product margins. OIBDA margins improved 50 basis points to 19.2%, and OIBDA itself grew 24% year over year to 566 million. And that led to cash from operations more than doubling to 1.86 billion. And then on top of that, from the conference call, 29% of customers during the quarter were new customers. This is fantastic news because historically, between 80 to 90% of the company's customers are they turn out to become repeat regular buyers, and so we can safely assume roughly 4 out of 5 of these new buyers will become loyal customers. So all things considered, this was a beautiful report, and I'm sticking by my prediction that the stock is going to eventually close the gap from the one-time special dividend payment. So that was Qurate Retail. Next company I wanted to talk about is Titan International, symbol TWI.
Just a minute, hold on a second, just to remind everybody that this massive gap down that you see in stock, depending on which chart you're looking at, just to be clear, this was a special dividend that was paid out of $1.50 per share. That's why this stock actually gap down. Otherwise, there was no any news or anything about this. If you actually remove this from this chart and you move this entire area north, basically this has been hitting new 52-week high essentially. But this chart looks weird because of the big $1.50 dividend, special dividend payment. And secondly, here is the Jaguar media video from October 12th, in which Chronicle discussed QRTEA. You know, okay, sorry, I didn't. It started to playing the video, but this is where Chronicle discussed this. So I just wanted to point out anybody who missed that conversation. Go ahead, sorry.
Sure. Next company is Titan International, symbol TWI. Laid out the bull case for this one on October 6th when the stock was trading at roughly 280. After yesterday's earnings report, it's now around 335. Just to refresh, this is the company that makes undercarriages and tires for heavy construction equipment. You know, with this company, I was very surprised that the stock didn't go up after Caterpillar's stellar earnings report, because remember, Caterpillar represents a big chunk of Titan's revenue. So I was surprised the market didn't catch on. So this would be a good example of how inefficient the market can be, because it's only after Titan's report that the stock decided to move. The company posted a beat on both revenue and EBITDA, and encouragingly, management said that Latin American ag has seen a strong jump in orders into next year, and that farmer income is expected to increase over 20% because of favorable projected crop prices. And additionally, the current age of fleets in the large ag segment is already well above replacement trend lines. So there's going to be a replacement cycle coming up. Just like Caterpillar, Deere is also another one of Titan's biggest customers. Separately, of course, we all know that residential construction has been strong. And then if we add fiscal and infrastructure stimulus to that, then 2021 is going to be an incredible year for the company in terms of growth. If we go back to our conversation on October 6th, I remember saying that if this is indeed a new cycle, then I wouldn't be surprised to see the stock trading with a 6 handle, which is the long-term downtrend line. Now, that would represent massive relative outperformance compared to owning something more boring like Caterpillar or Deere, precisely because small caps with unhealthy balance sheets will tend to see explosive upside at the turn of a new cycle. So that's Titan International.
And that's the key over there, that last comment that you made. The first most important thing is that Deere is one of its biggest customers, so is Caterpillar, but Deere particularly. And if you look at Deere, it has been on fire. Another new 52-week high yesterday as well. This goes back to our Buy America, Build America theme. It all ties into the manufacturing acceleration that we're seeing with global PMIs and all of this. And so this has been a beautiful trend for Deere. And so it is no surprise that TWI is also coming out strong. This is a low price stock, only $3.35, but on very high volume. It started to break out yesterday. And if you're saying it's going to go to 6 in long term, from on a percentage basis, that equates to 80 to 90% upside from here. And lastly, here once again, this was also discussed on October 6th, as you can see right here. and the bull case was presenting the speculative, highly rewarding stock TWI to play the infrastructure theme, while Class A truck orders spiked by 145% month over month and orders up 12% year to date. So the clues were all in front of us. We did discuss it, we did bring it up, and now the earnings comes out and the stock pops sharply. So very, very good timely update on that one, Chronicle. And the last one?
Yep, sure. The last one is Enlight, symbol LASR. The company reported after the close yesterday, and good gosh, it was a fantastic report. EPS 12 cents versus expectations for a penny. Revenue of 62 million versus consensus 57. Looking at the press release, this was a record quarterly revenue, and management is not just attributing strength to China, but also they saw an increase outside of China. And then looking ahead, they guided for Q4 revenue to come in between 59 to 65 million versus consensus 57, with 27% gross margin at midpoint. So I really like what I'm seeing from this earnings report, and I'm looking forward to going over the conference call once it becomes available. Maybe with this report, we can finally have that explosive breakout from these past 6 months of accumulation. I think 6 months is more than enough for a big player to accumulate enough shares. Like if it goes on any longer, at some point their position is just going to become too huge and they'll just become the entire market for the stock, which I'm sure is not their intention. So if this breaks out, I think it's going to have legs. So that's all I have for today. Basically an update for those three companies, all of them with phenomenal earnings reports.
Yeah, so also on this one, once again, folks, in this case, we provided the earnings preview and discussed the bull case on October 27th. And once again, this was Chronicle. Deep look into industrial semi, LASR, which posted record revenues in the second quarter and now expects that to accelerate with rising manufacturing Chinese PMI. I even used the picture that I used for that video for this company. So all three of these stocks discussed today are guided high. I want to point out that despite a very strong rally yesterday, if you look at the daily scale, huge volume surge yesterday, this thing is not giving up. In pre-market, after reporting that fabulous quarter, this thing is actually gapping higher with the futures down. So you want to be mindful of that. The stock closed at 25.23 yesterday, but the bid is 25.31. So it's going to open and it's going to probably attempt to rally one more time. And then how high can this take purely technically speaking? If you go to the long-term 3-year weekly scale, this is where the fun stuff happens, because this $25 per share has been a wall of resistance. And as commonly as I've said many times, the bigger the base, the higher in space. Right? And so this has been 2 years in the making of a large basing formation, and now we're seeing a high volume power candle on a weekly scale and a potential breakout through 25. Let's see how high this thing can fly. Maybe with the manufacturing PMIs rising, this is now finally going to catch up and go back to its post-IPO high. Maybe, who knows, all the way to $40 per share, especially with the kind of quarter the company just reported. Not immediately, but over time, naturally. So another fantastic view on this one, Chronicle. Congratulations. Great stuff. All right, folks, this is it for us, and we'll see you in the chat room shortly.